Welcome, everyone. We are back with our monthly roundtable with our friend Steve Saretsky out in Vancouver. How are you, Steve?
Good to be back. Thanks for having me on.
And John Pasalis, my co-host at Moose Smartly, and he is president and broker at Realosophy Realty in Toronto. How are you doing, John?
Fantastic working from the office today.
I can see that. And Steve, I should mention, is with Oakwin Realty out in Vancouver. Are you at the office, Steve?
I'm at the office. Yeah, I'm a little casual today, but
So
Nice.
you have your Bull Bears
Yes,
painting in the office. Nice.
it's
full
always
bear
been.
for John and I's engagement coming up here at the annual Veritas conference in the Toronto there. So looking forward to it.
Yeah, it'll be fun.
Yes. Now, this isn't a public conference, right?
No.
All right, but we mentioned this before on the
I
show. You'll
I
be
mean it's public if you want to, if you want to go. I mean, I can't they sell tickets for it. So yeah, technically it is public, but it's not like
The tickets
oh,
aren't cheap, so I don't think it's necessarily geared towards the typical retail client.
yeah, it's not. It's more like institutional, I'd say.
institutional investors and other watchers of the real estate industry.
Yeah.
And
Everybody gets a sneak peek here today.
well, you're going to do your grand debate there
That's right.
about the market, right?
We
Yeah.
are. We are. Bull versus bear debate.
Should we not reveal who's doing what and ask everyone to just send us
It,
their comments on who's
it's
what John is?
public. It's not a secret. It's in all their advertising. So me and David LaRock are as mortgage broker arguing the bull side, and Steve and Ron Butler are taking the bear argument. So we're arguing prices will be higher a year from now, and they're arguing that they won't be.
I'm a bit
So
shocked, John.
I know.
Well, we both kind of joke that I think you can make a case on either side ultimately. You can kind of pick narratives and data points and come to conclusions, I think, on either. I think there's compelling sides on both, but Twitter might not necessarily, or YouTube might not agree with that. But
All
Yeah,
right.
that
So
that was the organizer's idea. I mean, it's just to like pick a side, make the case for each side, and um,
yeah, people thinking.
yeah.
no. All right. Fair enough. So maybe we'll hear a bit of that come out today because first I'm going to ask you about the markets in both your respective cities in Toronto and Vancouver. But then we have a few happenings to discuss, including interest rate changes, even dropping rates. So let's start first with what the situation is like in Vancouver right now, Steve.
Well, I'm waiting for some of our data to come in, but looks like preliminarily, it looks like new listings will push north of 6,500 new listings for the month of September. So that will be an all-time record high dating back to, I've got data going back to 98. So yeah, I mean, John, I know you and I had this conversation several times many months ago, which was this was the big concern coming into September, right? It's like you're coming out of the summer, you're gonna get that big reset in the fall, which is typically a seasonally more active time of the year. Rates are coming down. Every seller's got the hopium that, hey, look, lower rates, prices must go back up. Bank of Canada's cutting. And I said, I was a little bit worried that I said, listen, I think there's still a lot of listings that are coming to market. And I think that actually what's going to happen is lower rates might actually bring more sellers because they're finally going to say, hey, maybe it's time to put this thing on the market. Rates are coming down. And that's, I think, what we've seen is that sellers have come to market, record high number of new listings, and sales activity remains subdued. It's not horrendous, but it's not good. It's well below the long-term 10-year average. It's actually slightly lower, a couple percentage points lower than last year in terms of sales activity. So slightly fewer sales, but a lot more listings and a lot of inventory that's just kind of piling up. And what we're seeing is ultimately downwards pressure on prices.
And you're starting to see that you were talking about the condo segment seeing that already, Stephen. Now are you seeing it in the other segment in the low
Yeah.
rise?
Yeah. We're seeing it again. We're seeing downwards pressure again on prices in all segments. Some are performing better than others. It's really hard to paint the market with a broad stroke, but yeah, right. I mean, again, fall market, lower interest rates, Bank of Canada's cutting, but prices are coming off. So
Right, which is interesting and a bit counter to what people are maybe thinking that a lot of buyers would get active. Steve, are you surprised about the amount of showings and other things you're seeing? Would you have expected that to be a bit
Not,
higher?
not really. No, no. I mean, I think like, like I said, I think that yeah, everyone kind of had it almost like backwards, and probably myself initially at the onset, right? When rates started going up, everybody said, "Oh my God, rates are going up. Bank of Canada's raising rates. There's gonna be a flood of inventory. There's gonna be there's gonna be so many listings, and prices are gonna crash." And what happened was actually the opposite, right? You had for many, many months, you had 20-year lows of new listings. People actually withheld inventory last year. And it feels like now that rates are actually coming down, they're finally bringing their inventory to market. And I you know that was something that I kind of cautioned on because we get a lot of these calls, right? Like a lot of times it's just anecdotal. We just get like a lot of calls from prospective sellers. It's like, hey, wanted to get on the market. And so like, you just kind of take all the information that you get and you do your best to process it. And I think that it's more or less shaping up kind of as I expected.
John, I think it's a similar situation in Toronto for what I'm seeing from the numbers. But again, take us to the numbers and also what it feels like. Are you seeing surprising, low number of showings, a bit slower market than you might have expected? And is it starting to hit the other segment as well, not just condos, but low rise?
Yeah, I mean, definitely it's hitting low rise. It's been hitting low rise for a while. So both segments have slowed down considerably. We look at the stats, there's nothing that really jumps out. I mean, sales are soft. I think they're actually up a little bit over last year. I think largely driven from low rise, not for condominiums. New listings are up a little bit. Uh, Average prices are down, I think, close to 5% for condos again, maybe 2, 3% for houses. I mean, it's a misleading metric because in some areas they're down a little bit more. Like definitely homes are selling on average, like I'd say less today than they were, even 6 months ago. And that's just because homes are sitting on the market a little bit longer. It's just a more sluggish market. Now, one thing I noticed recently, and I mean, I will admit, I mean, sometimes I don't look at the data weekly or high frequency until like someone suggests something. So, I'm picking up some brochures from our printer down the street, and they're like, "What the heck happened? It was busy the first 2 weeks of September, and all of a sudden we're dead." I'm like, "What is that about?" So I actually looked at the data, and they're kind of right, actually. If you actually look at the
Printer guy.
volume, which is like it's fascinating. Like
But
sometimes
I had that memory too, John, that both of you last month were saying in spite of the numbers, you felt busy,
it
right?
started busy,
Mhm.
and then and listen, this is where you have to take it with a grain of salt, and we talk about this with Steve and I. It's like how we feel our business or whatever is kind of one thing, but what the market's doing can be a little bit different. Like just because we are active, we're busy, we have clients, we're getting calls, it doesn't mean that is what's going on in the market. So when I looked at the data, based on this kind of cue from our printers, they were right. If you actually look at the volume of listings over like last week, which is like the last week of September, they're down considerably from the second week of September, like 27, 28%. I don't know. And they've been trending down the past 2 weeks. And I don't know why. I don't know if that's a blip, but I thought that was pretty interesting that the back half of September was a lot softer. And if you look at the previous years, there's not that big of a decline. It's kind of flattish. There's not a huge difference. So I don't know what's going on there in Toronto. We'll see if that sticks. Maybe some people are looking at the market and thinking it's slow. Why am I listing now? Unless I have to, So I don't know. And maybe we're getting mixed signals. Like it's
It's
not,
another interesting anecdote, John. There's staging companies. So
yeah.
we don't typically stage a lot of our properties. I mean, obviously, you typically don't have to in a bull market, right? I mean, everything sells in a week or 2 or 3 weeks. It's like, why stage? And just calling the staging company that we work with quite frequently, and they're like a big company. And just seeing how backlogged they are, they're like, hey, we're like 2 or 3 weeks out, and I can usually get them in like within a couple days.
Hmm.
'Cause everyone's got inventory that's sitting that they are looking for strategic ways to sell it and move it. And so it's like, well, hey, listen, we've been on the market for 6 weeks, no activity. We should switch it up. Let's get some staging in there. And so just seeing how busy these staging companies are, it's another interesting anecdote.
Yeah. So, I mean, that'll be interesting to see if the dynamics are different, like if listings slow down here, relative to Vancouver. I don't know. And we'll see if it's a trend, but I thought that was interesting the past couple of weeks to see that.
Any chance, John, that summer vibe, which is extended a bit longer in Toronto this September, it usually is a bit warm in September here. It's still not the end of our summer, but it seems to have pushed on a bit longer. Can something like the weather affect
I
buyer
mean,
sentiment?
sometimes it does, but I don't think that affects like that discourages people from putting their homes on the market. Like I think it's if the weather turns terrible, people might say, okay, let's hit pause if it's, especially as you move towards the winter when there's a lot of snow. But I don't
Mhm.
think that's a factor now. And again, like I don't know what it is. Maybe it's just people seeing the market slower, deciding to wait. Maybe they think the market's going to be busier in January. It's really hard to say.
Or
Hmm.
moving to our next segment, are they anticipating an even bigger interest rate cut? So maybe it hasn't been enough to get people excited. All signals look like the next month, Bank of Canada will be, some people are saying lowering by 50 basis points. That's because Canada's inflation now is in line with targets, and the US has made such a cut. So a lot of people are thinking that there will be bigger cuts to come. I think that would bring us to 3.75% for the key rate if that happens. So, what do you two think about the likelihood of that happening? And would that spur buyers back to the market in bigger numbers? Steve?
I mean, I think at some point, let's be honest, at some point rates get low enough where they entice people back into the market. Yeah, there's some worries with the labor market. Like we know that unemployment's going up. This is it's a tougher market. So there's less confidence out there. But at some point, let's call it what it is. I mean, you're gonna get rates down low enough where you'll entice people back into the market. And I'm not saying that immediately goes from a bear market into a bull market, 4 weeks from now. But I'm saying I think what you'll start to see activity increase off of really low levels. And at some point, again, I'm of the view personally that I can't predict the market where it's going to be 6 months from now, but I think we've got a pretty good, clear idea of what the back half of this year looks like. October, November, December. I think the next 2 or 3 months are relatively easy to pick, and we're probably going to muddle through, despite what the Bank of Canada does here. But as we get into the new year, I don't know. I think there's probably some more optimism there, but yeah, like I said, as of right now, it hasn't really spurred activity. Like I mean, John, like on the fixed rate side. We're talking about variable rate mortgages, the Bank of Canada cutting rate. On the fixed rate side, I mean, we got clients picking up 4.2,
Hmm.
4.3. I mean, I'm hearing rumors of 5-year fixed down at 3.99. I mean,
Hmm.
I don't know if that's necessarily filtered through into the rest of the market and people's perception, because a lot of people might still have rate holds, or maybe they talked to their mortgage broker 3 months ago when they were still getting quoted at 4.9, right?
Hmm.
So we'll see. At some point that will filter through.
Yeah, I mean, my instinct is if they go 50 basis points. So I don't think we're going to see a big rally. I think, like as I said, I think on our channel before, maybe I did another couple of videos. My instinct is January is going to be much busier. By then we'll have at least 75 basis point cuts. Maybe 100 basis points if they do 50 this time, because then we got another cut in December, and one in January. I mean, assuming, of course, they cut, which it looks like is kind of the path they're on. Then you're going to have rates in the threes, and I think the combination of much lower rates, you got to imagine we were obviously in the high fives for quite a while. So to have rates in the high threes, with the mortgage rule changes, which we'll talk about in a bit, I think that's going to be quite stimulative. And I think if the Bank of Canada cuts 50 basis points in October, you might get some buyers who think that the market is going to be busier in the new year, kind of jump into kind of get ahead of the market, as he'd say. You know what I mean? Like, because the market's sluggish now. I mean, it's not a bidding war type market for people who are used to Toronto's housing market. It's a little bit surprising to see homes with for sale signs on their lawns for weeks and weeks, right? So some people might just kind of jump in ahead of the market. So possibly, I don't know, but I don't think this year is going to be very busy. It's probably going to remain sluggish, but I do think it's going to be better. And like Steve said, I don't think we're going to go from sluggish to like massive bull market, 25 offers on homes or anything like that. But I suspect homes are going to be selling more quickly. I don't think they're going to be sitting on the market for weeks and weeks or months.
Do you feel like, John, like like the investor bid, like the one thing I'm kind of thinking about is I feel like the investor bid, like even with rates coming down, let's just make an assumption. Let's just say the next 3 to 4 months, people can pick up mortgage rates at 3.7, 3.8 becomes more common. Not that bad, really, when you zoom out, right? Like
Mhm.
it's pretty good. That's still pretty cheap money. I still wonder though, like, is the investor bid impaired, like psychologically damaged for the foreseeable future? Maybe that's 12 months, 18 months, 2 years, 3 years from now. I just feel like it's been such a roller coaster for these investors, which played a huge part of the market, that even with rates coming down and maybe stabilizing, I still wonder like how much demand are we going to see from them over the next year or two?
I think as long as prices don't grow rapidly or are flat or like I think it's going to be dead. I agree with you because everyone's been banking on capital gains. Like every investor doesn't care about cash flow because they're just expecting the unit to be worth 60, 70 grand more than what they bought it for last year. And if that promise is gone, I mean, the liberals, our government's trying to avoid that because it looks like they want prices to be higher. But if prices aren't growing or appreciating, then yeah, I think the investor bid's going to be pretty quiet over the next little while. So I think it's a coin toss. I think it really does depend on house price. But my instinct is I don't think prices are going to rally that rapidly anyways. You know what I mean? Like I don't think we're going to have like 10% growth or anything like that. And if it's like modest, slow single digits, I don't think that's enough to excite the mom and pop investor to go out
Yeah,
and
it seems like just chopping sideways for
yeah.
several years kind of thing. Yep.
Well, on that note, if it seems like now we're waiting for what you might call end user buyers, buyers that are actually looking to upsize or get in from a condo to a house, let's talk about the latest mortgage rule changes. Apparently, they are the ones being targeted for these changes. Will they make a difference? Before we go on to the bigger announcements that the Liberal government made just last month, I wanted to get your take on a smaller announcement about the stress test change. So those renewing mortgages don't need to requalify for the stress test. Based on your practices, was that really keeping a lot of people away from maybe considering a move?
John?
No, I mean, I don't think it was necessarily impact. I don't know if it was a huge impact on the move. It was a bigger issue because I mean, for those people who don't know what we're talking about, what happens is if once your mortgage came up for renewal, technically you had to requalify under the stress test if you wanted to change lenders, right? And for some people, depending on their income situation, depending on their bought, maybe that was a barrier, and it basically locked people into their current lenders. They had no choice, because if you stayed with your current lender, you didn't have to requalify, right? So it's just basically giving homeowners more options when their mortgage comes up for renewal. They don't necessarily have to worry about requalifying, it seems like. So it just gives them more options when they're renewing their mortgages.
Yeah, I've never heard of anyone like delaying a purchase or really talking about it. I think it's more just like, yeah, giving them options. I mean, what's going to happen here is it's not going to have any change in the market, but what it might do for the typical homeowner, it might save them 10 or 20 basis points on their next mortgage renewal. So I think it's a good thing for the consumer, but I don't think it necessarily does anything for the overall resale market.
Mm-hmm.
Yeah, I mean, this is something that's been championed for a long time by our friend and mortgage blogger with us at Move Smartly, David LaRock. It's something that will, like you said, do something in Canada that we don't often see, which is enhance competition a little bit. Maybe not funnel everyone into the same big companies or big banks in this case. So let's get now to the bigger mortgage changes announced by the federal Liberal government. Obviously, everybody's in a bit of an election mode. They announced the following: increasing the $1 million price cap for insured mortgages to 1.5 million. This is going to be effective December 15th to reflect current housing market realities. So again, I'll have you explain what that means in terms of the clients that you would be seeing. What would that mean to their bottom line, and whether you think that would make an impact? Steve, what about you in Vancouver?
I mean, I don't think we see a lot of people using CMHC mortgages just because, like, I think once you start making a purchase of, let's call it 1.3 million, it's like, what are you gonna do? You're gonna take a mortgage for 1.2? Like, that's a lot of mortgage to service, right? I mean, it's a huge monthly carry. So what we tend to find is people that are making purchases of 1.3, 1.4, 1.6 million dollars is they have larger down payments. Like a lot of times it's gift money, it's existing equity. And so we're seeing people come with larger down payments to lower their overall carrying costs. I mean, I'll let John chime in. I think this is more a move, and Christopher Freeland mentioned the supply side measure. I think it's more a move to sort of keep the pre-sale housing market moving, to make sure that all these units that are under construction, was there 160,000 condos across Canada that are under construction, helping a lot of these buyers close. Because if there's appraisal shortfalls, all of a sudden you need to come up with excess cash. And so, well, maybe you don't have to do that if you can just take on more leverage as long as you can qualify. And I think people will get creative in terms of their ability to qualify, whether that's additional co-signers, John, fake income docs, et cetera, you name it. But I think that this was a move geared towards helping what's happening in the new construction market.
But if that's the case, I mean, many of them are investors anyways. Like they don't qualify for CMHC.
So yeah. So to that point, you're right, right? So a lot of them are, but like, let's be honest. Okay, let's think this. Like, I'm trying to think this through. I'm trying to like devil's advocate. I think we know that there's soft fraud that happens in the mortgage market in terms of people that say, "Oh, I'm buying as a primary residence," and then they close on it, and then 3 weeks later, it's on the rental market. Like once it's closed, like no bank's going back and taking a look. So that's number one. Number two is, okay, let's just play an example here. Let's just say you bought a pre-sale for $1.4 million at the peak of the market. It's now appraising at 1.3. And it's either you're going to forfeit your 100K deposit or whatever you put down, your 20% deposit, or you tell CMHC that you're moving in. Because that's all it is. It's just a question.
But I don't know, because the banks have been closing on these deals without CMHC. So what you're suggesting, I mean, and you could be right, but it would be interesting, is what you're suggesting is that the federal government and the banks are kind of just tacitly supporting mortgage fraud to support over leveraged investors whose investments are not worth what they paid for them, to help them close on their properties. And the federal government will insure those purchases, is basically what you're saying.
Yeah, I am saying that. I mean,
which is very possible.
So out of the blue, like for years, they've been turning this blind eye to, oh no, we're not going to approve an increase to the CMHC limit. On their 2019 platform, they were going nuts about the idea of even extending that. Evan Siddall, former CMHC guy, says absolutely not. We'll never do this. All of a sudden, out of the blue, they raise it to not 1.25, which is what the mortgage industry lobbied. They go, let's just go 1.5. Why? Why now? And yet for years, people like, me, you, particularly Ron Butler, have been lobbying the finance department to input income verification linked to CRA. How hard is that to do? Why has that not been done? So I'm just skeptical that like it's so easy to implement income verification, yet they've never done it. And so I know this is a little bit like conspiracy theory, but I just think there's so many units under construction, and the banks are the ones that have financed the construction financing of that. And so if you get 10, 15, 20, 25% of a building that doesn't close because the appraisal values are short, I think it's easier to put it onto CMHC's books.
Well, yeah, I mean, and I don't think it's a conspiracy. I mean, we've talked about it on the show. Like, so many units are kind of getting appraised at what investors bought them for. Banks don't really care. And yeah, a lot of this is just
that's nuts.
It
the
is
blanket
nuts.
appraisal stuff is totally nuts.
It's completely nuts. And like, it's the only thing that's keeping the condo market afloat, because again, and it's really it's not driven by saving the mom and pop investors. It's like saving the banks who finance the project. Because like you said, if you have 20% of units, 30% that don't close, you have a massive problem. And it's like, not just for that one building, it is kind of systemic. Like it kind of fuels fear, this condo market and project collapse. It's like what happened during the financial crisis in the
So
US.
yeah, and to elaborate on that point, what about the fixed payment variable mortgages that where people have blown out amortizations to 50, 60 years and it's not considered a non-performing loan? You know, the banks just say, "Well, yeah, we'll just deal with it down the road. Don't worry about it. You're good." Even though they're paying zero principal at this point. Like I think everyone's just kind of turned a blind eye to what's going on in that segment of the market because again, it's what's best for the big five Canadian banks. And I think not dealing with that problem is the best thing for it.
Mhm.
So some skepticism. I mean, indeed, John, you released your own mini little documentary, not to be outdone by Pierre, on blanket appraisals. I'll put the link to your little presentation. And Steve seems to be suggesting here that maybe this is just another way to protect the market instead of blanket appraisals. And just to clarify, raising this cap on insured mortgages means that those people who haven't saved 20% down could still qualify for prices over 1 million now because they would qualify for CMHC home insurance, which basically allows you to buy insurance to, I guess, achieve that gap in your down payment. So
Even sorry to interrupt you. Even if you just said, even if you played devil's advocate, John, and said, okay, call it pre-sale market, 70% of the purchasers are investors, so the other 30 are end users.
Mhm.
Let's just say everybody was ethical and nobody committed mortgage fraud. At least it would help the 30% of end users that purchase pre-sales at peak valuations.
Yeah.
Probably help some of their scenarios to close. And people say, well, they have to still qualify for the income. I think when your deposit is when you might not be able to close, you might have to forfeit your deposit and then get sued for damages. I think you'll find another co-signer or someone to come on the mortgage with you before you forfeit $150,000.
Or banks turning a blind eye and just saying, don't worry about it.
Yeah, maybe. I don't know. I think like when your finance minister tells you it's as much as a supply side measure as it
Mhm.
is, first time home buyer measure. I mean, I think she's telling you what it is.
yeah, I mean, a quick point because there's other interesting innovations, shall I call them, coming out on the housing file in this election year. But so this argument that the Liberal government saying that it's about generational fairness and that 1 million doesn't represent a family, a home that would house a family in markets. So they've moved it to 1.5. Quickly, what do you make of that argument, John? It seems like in
Oh
Toronto and
gosh.
Vancouver, that's moot anyway.
Well, I mean, yeah. I mean, in Toronto, Vancouver, it's hard to get a family-sized home for under a million. I mean, that doesn't necessarily mean you should jack up the qualifying to 1.5. But in the rest of Canada, I mean, that's a luxury home at 1.5, right? Like it's unbelievable that they increased it to that extent without any geographic constraints. Because 1.5 million outside of Toronto, Vancouver, and maybe Victoria is a luxury home in pretty much every other city. So, you have basically a federal government ensuring luxury homes, right? That can be bought with effectively, what is it? Like after you deduct the CMHC insurance, you're basically buying with what, 3 or 4% down? Because
Yeah, I mean, Ron Butler says you're at 90 with the mortgage insurance rolled in on top. He has it at 98% LTV. Some people say it's more like 96, 90, you know what I mean? Anyways, you're boring it, call it 96, 97% loan to value.
yeah, so we're basically allowing people to buy $1.5 million homes with effectively a 3% down payment because part of their down payment goes towards the CMHC premium. And it's real like, and someone would say, well, why would someone do that? Listen, I mean, it's maximum leverage. If you want to put your capital to use somewhere else, if you can get, I mean, this is the funny part, you get actually a lower interest rate if you're maxed out on debt because it's government insured now, right? So we're actually encouraging higher debt by giving people lower rates. Some people are going to do it if they want to put their money elsewhere. So it's not, I mean, listen, and yes, Steve's point's correct. You're only going to have so many people who can manage buying a $1.5 million home with a minimal down payment because there's still an
Well,
income.
maybe you go into like the detached housing market you take on max leverage and you got like a rental suite, you got a basement suite that pulls in cash, and all of a sudden your carrying costs, it's honestly not that bad.
And you buy it as a principal residence, and a year later say, you know what, I changed my mind. Actually, I'm gonna move out of it, and I'm gonna buy another principal residence. Uh, you
And
know,
nothing changes, right? Like I said, once the deal's funded, it's you know, if
100%.
you decide to convert it to rental property,
No one cares.
6 months, yeah, right. I mean, so
That's
All
the
right.
funny part. Yeah. So it is a basically a way to finance investment properties indirectly.
Uh, so a little bit of cynicism there, then I think, on the way the Liberals are selling this. Quickly touching on their second change, expanding eligibility for 30-year mortgages, amortization, sorry, to all first-time home buyers and to all buyers of new builds. So they had previously done this in their August 1st budget. I believe it was a bit of, I think it was only for buyers of new
New
construction.
construction. Yeah.
And then first time buyers, but now it's first time buyers
Buyers
of
of-
new construction.
Yeah.
Now they're going to expand it as of December 15th so that it's all first time home buyers and all buyers of new construction.
Mhm.
So again, are they trying to protect a certain part of the market? What's going on quickly? Is this more of what you two have just been talking about?
I think so.
Yeah.
It's a developer bailout and a bank bailout. I have no other comments at this time.
Even if they're targeting the first time buyer, Steve?
Yeah,
Actually?
it's unfortunate the first time home buyer is the sacrificial lamb, but that's what it's being sold as a Trojan horse to the first time home buyer. But yeah, I think it's more to help with I think it's a gift for the development community, the mortgage community, and the banking community.
All right. Or maybe they know a little bit more about what their sheets look like than we do, which has always been the suspicion, right? So let's see. Now, one last question. What do you think this will impact? Like, will it have an impact on the market? John, you've pointed out in your many media interviews, this is stroking demand, spurring demand.
100%. Yeah. I mean, I think it is. Okay, definitely the 30-year AM, I mean, is going to be used by virtually every first-time buyer. You know, no, like the way the government frames it is, oh, we're going to extend the amortization. So when you buy a home, your payments will be lower. Like with the assumption that you still buy the same priced home, you can just lower your payments by extending the amortization. That's not how things work in big cities like Toronto. People, when you can extend the amortization, you can borrow more while keeping your payment constant. So your payment doesn't actually decrease. Rather than borrowing, say, $500,000, you know, and have a $500,000 mortgage, you actually borrow whatever, 570 or 580, and your mortgage is the same because it's spread over a longer period. So people spend more, right? So you're basically increasing people's buying power, which fuels demand, which fuels prices, which is of course a stim, and it's a short-term shock. Like, let's not forget that, right? Like, you have that juice at the beginning. Like, once prices have adjusted and everyone's doing it, at the end of the day, it is the market, right? It's kind of stimulative once you go from 25 to 30. But yeah, I agree with Steve. I mean, it's really just to fuel the market. I mean, the government doesn't like the fact that the market's sluggish. Home prices are flat. They've been flat for quite a while, especially in the big cities. Demand is soft, and they want to kind of stimulate housing. It's such a huge part of our economy.
And unpack that further. So you got you got the feds that are increasing not only to 30-year AMs, but you're increasing to 1.5 million uninsured mortgages.
Mhm.
You got the Bank of Canada aggressively cutting rates. You got fixed rate mortgages coming down. You got OSFI coming out all of a sudden saying, don't worry about the stress test on renewals. All of these changes in the span of what, 6 weeks?
Yeah.
And so to me, it's like at some point things will turn around. Maybe again, maybe not a raging bull market, but at some point these measures will filter through, and it's pretty clear. I think, John, what's more interesting is the signal, right? It's the
Mhm.
signal that feds are saying housing corrections are not okay. We need to
Yeah.
get reelected, and having a housing market where you get 20-year lows and new home sales in the GTA is not good. And
Mhm.
so we need to re-stimulate. So who cares about affordability? We need to keep this thing going. And so it's just more, to me, it's more the signal that policymakers continuously come in to support the housing market. So
Yeah,
And
I mean,
and yet, Steve, you're going to be a bear on Thursday. Interesting.
yeah, well, we're still working. We've still got some problems behind the scenes, but
You're right. So
you know,
so there's a preview of some of the positions. Sorry, John, you were saying.
no, I'm saying Steve's 100% correct. I mean, this is obvious, and you cannot like underestimate the signal. Like the signal is huge, you know. I think before the Fed's announcements, you know, people were a little bit more worried about what the new year might bring. Like even with lower rates, you know what I mean? It would still be a challenging market. And I think the Fed stepping in so aggressively with their mortgage policy changes, like they're just giving you the signal that they're going to do whatever they can to keep things going, right? And of course, the way you do that normally when you're a Canadian is just increase how much debt people can take on, right? So extending amortizations and doing all of these changes. So
all in the best interest of the first-time home buyer.
yeah, unbelievable.
So, yeah, well, I mean, in a country where not only the homeowners would be facing trouble, the builders, banks, like this is what you get in a housing-focused economy like Canada's. So, whatever the packaging says on the tin, it's meant to do one thing, which is keep prices up. I wanted to, before we go today, zoom in a little bit more, Steve, more innovation on the housing front coming from BC as the election for the provincial elections there heats up. And I just saw some really interesting policy announcements or initiatives coming from the Conservative Party. So right now it's the NDP in power in BC. And the campaigning against them, the Conservatives announced a couple of their policy directions. So one is the largest housing tax cut in BC's history. This would provide relief, remove income taxes from 3,000 per month of housing costs. So basically giving mortgage relief, tax relief on those holding mortgages and renters. So
Yeah.
whether you own or whether you're renting, you could claim those housing costs up to 3,000 a month.
Yeah, it's a little tax discount, subsidy, whatever you want to call it.
A credit, yes.
Credit. I think someone was saying, I haven't run all the math on it. It's going to work out to like, could work out to $700-800 a year kind of thing. I think it's ramping up in 2026. On the flip side, the NDP just came out because everyone's just like, okay, what goodie can I offer, right? So the Conservatives come with that. The NDP comes out, I think, a couple days later and says, we're just going to give you $1,000. So there's going to be a check that's apparently coming in the mail.
Get out of here. Seriously?
Yeah, I kid you not.
To who? Like everyone?
To my knowledge, it was everybody. Actually, no, I think it was income tested as long as your household income, I think, was under 145,000 or something.
Wild.
$1,000 now.
This is the one time our housing is completely unaffordable rebate.
If you want to talk about additional demand side stuff. So again, I'm trying to look at both platforms, but it's interesting to see what these people are coming out with on both sides. Because the Conservative Party is trying to roll back a lot of the NDP stuff on sort of the forced density. So they're like, well, we think it should be kind of like more like let the municipalities, we'll kind of push where we need to, but not, this is maybe a little bit too aggressive. So they're kind of trying to dial that back, which is interesting. But then you get policies like the NDP that are coming out, and they got this new one, but they've just announced a couple projects. John, is they're going to pay 40%. They're going to finance the first 40% of the purchase price for your home.
You're kidding. What? What are you talking about?
So basically what they'll do is it's a little bit confusing. So viewers of this might have to go and Google and read it. But like basically what they'll do is, let's just say a developer's selling a 1-bedroom condo, and this is the prices. They had one project in Vancouver here. It was on First Nations land, so it's a 99-year lease. And they're saying, okay, the 1-bedroom condos, we're selling them for $800,000. We'll finance the first 40. It'll go as a charge on title. You only pay us back the first 40%. You pay us back the 40% when you sell or after 25 years.
Wait a second. The 40% or 40,000?
40%.
They'll finance the first 40%.
40%. So you go to the bank and say, okay, I'm buying a condo for $800,000. The NDP's basically covering the first 40% of the purchase price.
They're going to cover $300,000.
And then you just go to the bank. So they already chat with the banks and says like this isn't going to impact how the bank looks at the loan, and the bank will finance the remaining, and so you only have to come up with this very small down payment. The trick is the prices, in my opinion, are quite inflated, right? Obviously, when the government comes in and supports the valuation, naturally, you don't really have a free market there for a price signal. But I think then the second challenge is you have to pay it back when you sell or after 25 years, whatever comes first. So let's just say you buy it and then like 4 years later, you're like, I'm out. I got to move, got a new job, got a family, need to upsize. You got to resell it and pay back that loan. The new buyer has to pay the whole price. The new buyer doesn't get the 40% sort of freebie that you got. And so the question now is, well, hey, if you pay $800,000 for the condo in 4 years, is it really worth 800? I mean, I'd argue it's probably more like 725.
Well, I mean, especially if it's a leasehold property on a 99-year lease. I mean, every year that passes, it's effectively worth less.
Yeah, it's just such a weird program. I don't know what the uptake is going to be. I mean, I just don't think people are overly excited about sharing a home ownership with the government, as we saw with
the CMHC. Yeah.
But to push back a little bit, would this kind of arrangement attract fine? Maybe not the middle income person who might think, okay, I want to upsize in a certain amount of years, but people who would never get in otherwise.
I don't know. I just don't know. I just don't believe fundamentally that the government should be involved in subsidizing the cost of home ownership.
You know, save the interventions for the rental market
for the non-market housing or something like that.
Yeah, exactly. Like I think if you've got provincial land, go out there and hire out private sector construction company and let them build, and then you go lease out units at a subsidized rental costs. But financing demand,
that's crazy.
It's stimulative, right? So we talk about all these policies. In my opinion, you're adding stimulus to the market. But
very interesting. We'll try to hunt down all those links. And quickly, a couple more initiatives. You touched on them, Steve. The Conservatives are saying they will scrap the NDP's bill, which allows zoning changes to allow up to 4 units on a standard residential lot. They will scrap that. And there's one more very interesting thing. The party is committed to self-reliance, meaning that if an engineer signs off on a project, that's good enough. The municipal checks, no municipal checks would be needed after that.
Oh,
yeah, I just don't know how some of this is going to work. I think they ended up rolling that back and said they'll allow small scale multiplexes on 2/3 of residential land. So again, the NDP said on all land. So now they're saying, well, let's allow it on 2/3 of land. So we're not necessarily getting a clear direction, which is funny again, because like the election is like 2.5 weeks away or 3 weeks away, and everyone's still kind of figuring out their policy.
I think they're testing the waters. They're throwing out and then seeing if there's a backlash. And if there's a backlash, then they start to step away.
And the NDP came out with they came out with a rental protection fund. So I don't know. I know it's a big problem in the GTA, which is where you have the tenancy board is so backlogged. People know it's a broken system.
Yeah.
And so they'll just say, well, I'm going to live here for free for 6 months, try to evict me. And then the landlord's out a whole bunch of money. So the BC government's saying, well, and we don't have this problem really, in my opinion, to that same extent as you guys do in Ontario. But there's definitely a lot of homeowners here where tenancy laws are so stringent that people that have like basement suites, they're like, you know what? I think I'll just leave it empty because like it's just not worth the squeeze. Like, I had one bad experience and these people are impossible to get rid of. So now the BC government saying, in their infinite wisdom, is saying, we'll create a rental fund. So you don't worry, you put them in there, put them in your suite. And if they stop paying you, we have a little bank. We got
oh my God.
Fund, and we'll pay you, the landlord.
That's insane. Wow.
Which again, I just think it creates a signal where if I'm a prospective tenant, I'm like, yeah, I'm not going to pay this guy. Who cares? If I know the BC government's got his back.
What a mess.
I don't know. So anyways, everyone's just throwing things at the wall on all parties.
I mean, you know, the more I hear a lot of these policies, I feel like we're led by clowns half the time. Like, honestly, like some of them are so insane.
Or
yeah,
Mayor
it's just-
Quimby of The Simpsons, at
Oh
least.
my gosh.
yeah, I don't know
Yeah.
who they consult with and who gives the ideas and all that stuff, but like I think every party is guilty of
Oh yeah,
you know what I mean? Like it's just
100%.
But doesn't this show you that for so long, the lack of serious policy analysis on this file results in this crazy crisis? And now it's like, well, let's just throw everything at it
Mhm,
almost in a very rudimentary way.
mhm.
Literally,
right.
some of these ideas are like things your relatives will tell you at like Thanksgiving dinner. Like,
Totally. And so think about this, right? So it's like, yeah, not to like drag this show on, but like we've like been debating about all these policy measures around housing and how to fix it. It's so bad. And so you've had like the BC NDP has been very progressive on like, okay, like let's force through zoning changes. The Liberal government's like, yeah, that's a great idea. We'll give you money for doing that. And like I'd say, in my opinion, there's probably a pretty good chance that the NDP will be gone. So the Conservatives will probably reverse a lot of those changes, and probably the liberal government at the federal level probably will be gone, and so a lot of those changes or things that they tweaked will also be gone under the next government, and so it's kind of like around and around you go every 4 years. That nothing ends up getting fixed.
What a mess.
what do you mean? There's not going to be a tunnel under one of Canada, Ontario's biggest
Oh
highways?
my gosh.
Yeah.
Painful. All right.
Yeah, some crazy measures. So I'm taking it, John, last word, that you don't think developers, engineers should be allowed to sign off on all structures without any checks.
No, no, insane. That's insane. I mean, some of these policies exactly.
Yeah.
Mind blowing. But
Damn
anyhow.
it, John! I just gave you the entire bull case for our.
I have been wondering about your
Shoot, I
strategy.
gotta make some notes.
All right, all
All
right.
right.
Well, we'll hear more about the results of your debate. We'll try to put in as many links to those initiatives in our show notes as possible. All that's left for me to do is to thank you for listening and watching. You can reach John on X Twitter at John Pasalis. Steve is at Steve Saretsky. The show is at Move Smartly. And thank you. We'll see you again next week for the show, and for our roundtable, we'll be back in a month's time.